In every age, there is a place where risk turns into religion, and for modern civilization, that place is Wall Street. What began as a row of modest brokers trading bonds beneath a buttonwood tree became the beating heart of global capitalism. Yet beneath the tickers, numbers, and billion-dollar trades lies something older than finance itself, the hunger for more. On October 29, 1929, that hunger turned to panic. Stocks plummeted, fortunes vanished, and brokers once toasted with champagne now watched their empires collapse in silence. Decades later, the same hunger resurfaced, in glass towers filled with traders who believed they had tamed chaos with algorithms and leverage. They called it innovation. Others called it gambling. Greed is good, they said, a mantra echoing through trading floors from New York to London. But in the house of risk, someone always pays the bill. And on Wall Street, the lights never go out. Before skyscrapers and stock tickers, Wall Street was a narrow colonial lane shaded by a wooden wall built to keep outsiders away. By the early 1800s, it had become something else entirely, a marketplace for capital, a laboratory of ambition. Brokers, bankers, and speculators traded not goods but promises, turning trust itself into currency. The invention of the telegraph and later the ticker tape transformed finance into a national sport. Railroads, steel, and oil companies raised fortunes through public listings, while J.P. Morgan's banking empire became the silent hand behind America's industrial rise. Money was no longer just paper. It was infrastructure, expansion, and empire. But success carried temptation. For every investor who sought growth, another sought shortcuts. Credit expanded beyond reason, leverage grew invisible, and speculation became a pastime for both the rich and the desperate. Wall Street's energy was electric, but unstable. Each boom promised a new era. Each bust proved how fragile that dream was. By the roaring 1920s, the marketplace had evolved into a theatre of illusion, where everyone played to win and no one believed the game could end. Until one morning in 1929 it did. It began with whispers, rumours of overvalued stocks, nervous bankers, and margin calls that came too late. On the morning of October 24th, 1929, panic flooded the trading floor of the New York Stock Exchange. Within hours, prices collapsed faster than anyone thought possible. The great crash had begun. Speculators who had borrowed to the edge of their means were wiped out in a single day. Banks failed. Factories went dark. Millions lost jobs, homes, and faith in the system that had promised endless growth. Wall Street, once the symbol of American progress, became the villain of a global tragedy. Congress responded with fury. New regulations, the Securities Act, and the birth of the SEC. Trust would be rebuilt through law, not belief. But the damage was deeper than the numbers. It was moral. The myth of infinite profit had met the limits of reality. Still, even in ruin, the brokers returned, because collapse was not the end, merely another beginning. The game would be rebuilt, the rules rewritten, and the stakes raised higher. Wall Street had fallen, but it had also learned something powerful. Risk, when packaged well, always finds new buyers. Half a century after the Great Depression, Wall Street was reborn, louder, faster, and hungrier than ever. The 1980s brought deregulation, cheap credit, and a new religion of profit. Traders no longer wore grey suits of restraint. They wore confidence like armour. The new titans weren't industrialists. They were dealmakers. Junk bonds, leveraged buyouts, and hostile takeovers became the tools of financial conquest. Men like Michael Milken and Ivan Boesky rewrote capitalism's code. Debt was no longer a burden, it was a weapon. With borrowed money, raiders dismantled corporations piece by piece, selling off divisions, firing workers, and pocketing billions in efficiency gains. It wasn't about building companies anymore. It was about extracting value faster than anyone else. The film Wall Street captured the era perfectly. Gordon Gekko's voice echoed through boardrooms and trading pits alike. Greed, for lack of a better word, is good. And for a while it was. The market soared. Bonuses exploded. Champagne replaced coffee on trading floors. But beneath the glamour, a quiet rot spread. Risk was ignored, loyalty abandoned, and ethics reduced to a line item. America had discovered a new kind of capitalism, one that didn't produce wealth, but recycled it. In the wake of the 1980s, Wall Street's new obsession wasn't ownership, it was compensation. The bonus became the heartbeat of finance. the reward that turned ambition into addiction. Traders measured their worth not by skill, but by the number printed on a year-end check. Every deal, every risk, every moral boundary was pushed for that one moment, the bonus season. The system was simple but dangerous. Profits were rewarded instantly. Losses were someone else's problem, deferred into the future. The bigger the gamble, the bigger the payout. A young analyst could make millions in a single year by betting other people's money and walk away before the fallout. What had once been a market became a casino with golden chips. The same culture that built skyscrapers on Manhattan's skyline began hollowing out its soul. Risk was no longer managed. It was monetized. And in boardrooms far above the trading floors, executives smiled. Because as long as stocks went up, no one asked how. By the early 2000s, the language of Wall Street had evolved into a science, or at least it looked like one. Derivatives, mortgage-backed securities, credit default swaps, elegant names for increasingly reckless ideas. Mathematicians, not bankers, now ruled finance. Algorithms priced risk, and risk, for a time, obeyed. Banks no longer lent money to homeowners and waited for repayment. They bundled those loans into complex products, sliced them into tranches, and sold them around the world. Each layer distanced responsibility. Each sale buried danger deeper. The illusion was perfect, a market that could not fail because everyone believed it couldn't. Ratings agencies stamped junk as gold, regulators nodded, and traders grew rich off commissions from assets they barely understood. It was capitalism's most seductive illusion yet, that risk could be engineered away, profit guaranteed through complexity. But models, like myths, only work until reality intrudes. And in 2007, reality arrived, disguised as unpaid mortgages, collapsing funds, and a market gasping for liquidity. Wall Street had finally achieved what it always wanted, a system too sophisticated to fail and too large to save. It started with silence. Then came the panic. Lehman Brothers collapsed. Bear Stearns vanished. AIG begged for rescue. Within weeks, trillions in wealth evaporated. The global economy froze, and Wall Street, once the engine of prosperity, became the epicenter of disaster. The same firms that had preached efficiency and innovation now pleaded for survival. Lines formed outside banks. Retirement funds disappeared. Families lost homes they'd spent decades paying for. Governments stepped in, not out of compassion, but necessity. The system was too interconnected to let die. Bailouts were approved, interest rates slashed to zero, and money was printed at scales unseen in human history. The public watched as the same architects of collapse walked away with bonuses, while millions of ordinary people paid the price in foreclosures and unemployment. For a brief moment, it seemed the world had learned its lesson. Unchecked greed destroys everything it touches. But memory fades faster than reform. By the time markets stabilized, the old habits had already begun to return, dressed in new suits, speaking the same language of profit. Because on Wall Street, recovery has never meant repentance. The crash didn't just bankrupt banks, it bankrupted belief. For the first time in generations, Americans looked at Wall Street and saw not genius, but hubris. Executives testified before Congress, insisting they hadn't known, couldn't have predicted, weren't to blame, and yet their bonuses remained intact. Ordinary people lost homes, savings, and faith in a system that rescued the powerful and abandoned everyone else. The divide between Main Street and Wall Street became more than economic. It was moral. Markets recovered, but trust never did. The numbers on the ticker rose again, yet something fundamental had been broken, the idea that risk and reward should belong to the same hands. America had repaid its financial debt, but not its moral one. Today, the skyline of Manhattan still gleams, glass towers reflecting the same sun that once shone on 1929. Algorithms trade faster than thought. Fortunes rise and vanish in milliseconds, and the cycle begins again. Each generation swears it will be different, that this time greed will be disciplined, risk will be rational, and history will not repeat. But it always does. Because Wall Street isn't just a place, it's a mirror. It reflects the human condition, our brilliance, our arrogance, and our endless desire to win the game, even when the house is on fire. And somehow, the lights still never go out.